Filing taxes is hard, especially if you're a real estate agent. Are you a realtor wondering what you can and can't write off on your taxes? Then this video is for you. Hey y'all, it's Benita from The Big Easy. Welcome if you're new, welcome back if you're not. Either way, thank you for stopping by. Speaking of not being new, y'all, 82% of y'all that have watched over 32 hours of my content are not subscribed to my channel. Can you please do me a favor right now and click that subscribe button and help me get to 1,000 subscribers, please? That would really help me stay motivated to put out this content for you guys. Okay, so let's get into these taxes. I know for a fact how tough it is to keep track of all the deductions when we have so many other things to worry about. We got spouses, we got kids, some of us got 2 jobs, just to name a few things. And between keeping up with mileage and marketing expenses and all the other write-offs you can claim as a real estate agent and trying to differentiate between what you can and can't claim, I know filing your taxes can be a little daunting. So I decided to make this video to help us out. So what exactly can we write off on our taxes as a real estate agent? The federal government has created various tax breaks and incentives for those of us in this industry, which means there are a lot more opportunities than ever before for us to actually get to put some more money back into our pockets should we claim these exemptions correctly. And I'm not just talking about commission payments either. I mean every last penny. Y'all know I like me some free 99. I want every dime. So in this video, I'm going to show you more than 100 items that are perfectly legal to claim as a deduction, but I'm going to categorize them. Please stay to the end to find out the huge mistake that a lot of people make if they don't claim these deductions properly. And I also have a trick to get around the less than $25 rule on client gifts. So stay to the end for that. So let's go. The first thing is, I need to preface this video by saying I am not a tax professional or a tax expert, and I don't play one on TV. And while I am an attorney, I'm not a tax attorney. So please, please, please consult your own accountant or tax attorney for tax advice. Okay, so number 1, advertising. Advertising includes everything from billboards to brochures, flyers, business cards, copy editor fees, direct mail, email marketing and newsletters, graphic designer fees, internet ads like Google pay-per-click, Facebook ads, etc., leads, mailing lists, marketing services, network event costs, postcards, print ads, newspapers and magazines, promotional materials like caps, cups, and pens, radio ads, signage, banners, television ads, web design, web hosting and domain fees. Number 2, we have agent improvement. Y'all know I love me some learning, so I'm so excited that we can write off books, sales books, real estate books, textbooks, reference books, our continuing education, magazine subscriptions, newsletter subscriptions, and trade publication. We can also write off sales, training, coaching, and seminars. Number 3, auto. Now you can either claim business mileage as a standard deduction, which beginning on January 1st of 2022, the standard mileage rates for the use of cars, vans, pickups, and panel trucks is 58.5 cents per mile, driven for business use, guys. That's up 2.5 cents from 2021's rates. So make sure your tax professional knows that. Or you may itemize the following: depreciation, lease payments, gas, insurance, interest, license and registration, maintenance, repairs. And then both of these options may itemize car washes and tires. Number 4, business travel, meals, and business entertainment. That includes airfare, car rentals, dry cleaning, laundry, lodging, meals, tips, parking tolls, taxi, train, subway, and bus fares. Number 5, communication expenses. That includes answering services, cell phone services, fax expenses, e-fax, interactive voice response systems, internet service, office telephones, pagers if anybody still has a pager, and toll-free numbers. Number 6, equipment is covered. That includes everything from briefcases to calculators, cameras, lenses, cell phones, smartphones, cleaning equipment like vacuum cleaners, computer equipment repair, flashlights, GPS, hard drives, thumb drives, iPads, tablets, PCs, Androids, laptops, lockboxes, locksmiths, keys, maps, printers, scanners, staging items, furniture, tape measures, video cameras. cameras, and more. Anything that can be considered equipment or anything that you use for equipment. Number 7, employee wages, which includes family members, guys, kids, spouses, yes, clerical support, payroll, unemployment taxes, sales assistant, and virtual assistant. Number 8, health insurance. Number 9, home office expenses, including insurance, mortgage interest, rent, property taxes, repairs, maintenance, security systems, and utilities. Office expenses, desk fees, franchise fees, affiliation fees. But remember, if you're with the brokerage that I'm with, EXP, you cannot write off these expenses because we don't have them. Heads up. Client refreshments, including snacks and coffee, water, copier fees, janitorial services, office furniture, bookshelves, chairs, desks, filing cabinets, office supplies, including envelopes, folders, paper, pens, postage, stationery, toner, ink, office rent, online storage of business files and software. Number 10, professional fees, state and local association dues and fees, NAR dues, NAIREB, NAREB, NAEBA, and any other letters out there, CREA, Chamber of Commerce, etc. You can write off bank fees, bookkeeping fees, business licenses, E&O insurance, interest on business purchases, legal fees, MLS fees, and tax prep fees. Number 11, you can write off your retirement plans, your defined benefit plans, your self-employment pensions, simple IRAs, and solo 401ks. We can write off our selling expenses, appraisal fees, client gifts. You're limited to less than $25 per client, guys. Don't get in trouble. Closing attorney fees, concessions, courier services, delivery fees, finder fees, referral fees, home repairs to sell listed property, home warranties, inspection fees, notary fees, open house expenses, professional photos, which I buy for all my listings, regardless of price point, guys. Some people will say, well, why are you doing that? Well, number 1, because I provide my clients with an exceptional experience. It's not just a transaction for me. And if you are treating one client one way because their house costs $50,000 and another client another way because their house costs $1 million, what happens if one day they meet each other and they discuss you? You have her saying, she didn't do that for me. People never remember what you tell them, but they always remember how you made them feel. And they tell everybody. And so you want referrals, right? Referrals are probably 90% of my business, guys. So you want them saying good things about you. And the second thing is, it's a freaking write-off. So you're not paying for it ultimately anyway. Let me get off my soapbox. You can also write off the photo editing and any staging fees. You can write off your startup expenses, including your organizational costs. If you're spending money on attorneys to draft your documents, that's all deductible. As with anything tax related, there are always rules, Uncle Sam's rules and regulations that you have to follow. You need to be careful not to overstate any of these deductions, or else you might find yourself in a pickle with the IRS. But if you play by the rules and you keep good records, you can save yourself a lot of money come tax time. Okay, so we're at the end, and I need to tell you the 2 things I promised you I would tell you. Number 1 is don't overstate deductions, especially if you're planning on buying a home for yourself or making some other huge investment that may require financing, because if you take too many deductions, then you're going to end up with not enough income at the end of the day to qualify. And then the second thing I wanted to tell you was how to get around the $25 client gift rule. I give all my clients a closing gift, but it doesn't technically qualify as a gift, because what I do is, for example, my referrals, I give them a very nice, expensive spreader that says, thanks for spreading the word. And it has my name and my phone number engraved on it. So every time they use that, they see me and I stay top of mind. With my buyers, I'll give them a gorgeous wooden cutting board, and it costs about $80-$90, but it has my name engraved on it so that it qualifies as advertising and not a client gift. And it also helps you stay top of mind. So that's how I get around the $25. I mean, what can you buy anybody for less than $25 these days, let alone a client gift, when you're getting a $5,000 or $10,000 commission and you're limited to only spending $25 on them? So that's my video. And again, listen, I'm not a tax professional. Consult your own accountant. If you guys enjoyed this video and you enjoy me bringing this type of content, I love doing research and finding new things to tell you guys, or I love answering questions that you may have. So please subscribe to my channel so I can continue to stay motivated to provide you guys with tips, tricks, content, and all types of real estate related information. If you would like my free list of all of the deductions listed in this video, comment "I want the list" below and I'll send it to you. Thank you guys for watching. I love you guys. Bye.